In this tutorial of MetaSwing for Bloomberg, we're going to cover building positions. In this tutorial, we're going to talk about building a position, where you want to size into your high conviction ideas before an event that you're waiting for. It may not be an event, but maybe you have an express view you want to accumulate. You think the security will move in your position, but you also have to figure out your risk. And so I'm assuming your goals are to accumulate position based on a view before an event. It could be a catalyst or just your informed view. Secondly, you want to gauge your risk while doing so. And what this will give you is time. You want to have time to exit a successful trade after hitting your target, and you also want to be able to exit a bad trade or reduce your position, and you want these levels that you're measuring your risk to hold for some time in order to allow you to get out of the position. So here we're going to look at the dollar index. This is the active contract. And so I'll just use this current example here. One of the things I've noticed in the media is that everyone's been very negative, the dollar over the summer. And the interesting thing is our software has come up and shown that as early as the end of July here, July 27th specifically, that a region of support has been identified based on volatility technical analysis. So we're looking at 73.76 to 73.14. And so all the while, there's actually quite a substantial area of overhead. And so if I came in August here and I'm a fund manager and I'm wanting to express my view that I want to go long the dollar, I think it's going to rise, and not everyone knows about this support here, that what I can do is fine-tune my entry by going into an intraday chart. And so now we've defined our risk reward on a weekly time frame. We have 60 cents to $2. That's a pretty good risk reward ratio. Getting into the nitty gritty, so to speak, on the 120-minute chart, and I'll pull up my tracking here so you can see this level. Okay, so we're looking at 73.76. So right around this area right here, if you'll notice, there's also support resistance regions forming on the intraday level in this area. And so when this type of multi-time frame analysis applies, is very powerful, and it lines up the odds in your favor even further. And so certainly what we're doing here is we're trying to accumulate on extreme lows this area. I want to get as close to support as I can to accumulate in the hopes that my view will play out. And so along this view, we've also seen that in this area of support and resistance here, along these levels, we also have Adeo longs and exit short signals as well. And these are nice because they add even more to the probability, saying there's more context other than just support and resistance to lend to the view of a move up. And so all the while we can accumulate along this range. It's holding intraday very nicely. As we pan forward, we see that eventually this view pays off, and a very classic basic view of technical analysis is once an area of resistance has been tested, it has now become support. And so all these areas of support and resistance above, both projected and in bands, have been tested here, broken out above, and now have successfully tested, now can be leaned on as support. And so you've accumulated along the low of 73.76 plus or minus depending on when you execute your trades, but now you can actually add to your strong position and use dynamic support and resistance as objective to accumulate and manage your risk going forward. So even to fine-tune our view on the hard right edge, what I see is we have levels that we can lean against here starting at 75.41 to 75.04, and so I can accumulate more further positions here on a pullback, as well as the in bands are rising along with price. And so this means that resistance is actually rising at the same time price is rising. And so I might be looking to start to leg out of my position as we're starting to hit this zone in the in bands, where there's the in band and the 1 ATR region below that. This tends to be heavy resistance. Now the nice thing is if I can hold my position and this area holds, what you can typically see is on this upper time frame, the in bands are bringing the point up. And so if this is the case, then that means that resistance will now be rising as well. So price might still have some legs to continue running, and then I can yet again lean against these other levels to start legging out a position further up if my trade can make it to that level. Here we're going to cross the security landscape, and we're going to go to an equity, and we'll look at another type of event, which is earnings. Let's take a look at Google. The reason I picked Google is it's a very volatile stock. Here we have an interesting area where after earnings, prices pull back in late August, early September to a region where there's a lot of overlapping resistance. So you have this range here and this range here. So depending on how you want to doctor your support or doctor your stop outs, you can be real tight and use the 444.90, or you can go a little bit wider and 423.78. Either way, you have a nice defined area of risk, and you're basically taking a trade at support. So we're expressing a long view before earnings. If you take this to the daily time frame to kind of work into the particulars, you have a level that's been set in, and it moved up slightly higher here. Let's highlight this. So this area here and here that I'm highlighting right around this time frame. So we're approximately the same area of this 460 range. And so I've got two levels from a multi-time frame point of view, weekly and daily. They're lining up. I've got some day longs saying this is a relatively good time to accumulate for a short period of approximately 2 to 5 periods, but this gives us a good jump on our trade, and I've got well-defined risk. On top of that, the daily time frame, I can drill down a little bit more. At this point, I know that there are in-bands below me, but I also have this level here below at 429 cents. So very similar to this level, a little bit below this, but so we have multiple layers of support below our trade. And so as the trade unfolds, there are areas where we can manage, and we can begin legging out once it hits support and try to hold on into the earnings. But this trade actually worked out very well.
And going across the asset class universe, we're going to look at equity here, KCI, and this is interesting because it's had several examples of multi-time frame support and being able to lean against that. In the first instance, if you're going to play something like earnings, for example, this one here in February 1st, you've had price in a downtrend starting to turn up, and let's say your fundamental or other research is suggesting a positive earnings outcome. Now you have these levels that were set in back in early December, and so now you have roughly 44.53 to 42.10. If you look on this is the weekly time frame. If you look on the daily time frame, you have a similar area here between 44.63 to 42.68. So a little bit tighter area, but nonetheless in the same region. And so now you have a tight area where you have well-defined support on 2 time frames, and thus you can manage your risk in that way. Also above, you have as a potential target, you have 58.82 to 61.44. Plus you have a nice additional thing of at that time you're looking at a rising in-band. We don't have the luxury of knowing what this part of the chart looks like yet. So this played out rather well, even with actually the target being hit. As you noted in the performance documentation, that the SR lines are meant to be statistically valid. So when one of these is touched and it's been more than 20 periods for the first time, that tends to be significant. At the very least, you tend to see a pause, if not a reversal. Going back again and looking at a post-event example, after the earnings here in July of this year, you had some nice volatility shift signals that worked pretty well, an in-band touch, and then you had a nice sharp pullback into this defined area of support resistance. So 61.44 to 58.82, and these levels again were put back pretty far in the past. These are back in June of 2010, so you're looking at quite a bit of time in the past, right? So prices pull back. Let's zoom into the daily time frame and look at how the trade could unfold. the same time, you have similar levels being put in between 60.62 and 59.64. So now we have multi-time frame support. We also have a high probability signals in place here, high slopes and day longs in addition, so that can give our trade a quick push in the near term, and you see that the trade fared pretty well. So again, these are two examples of using the multi-time frame support to manage your risk and also to gain targets. In this example, we're going to look at rates, and we're going to specifically look at the weekly and daily time frame for the U.S. government 10-year yields. Let's say in April of 2010, you have the view that rates are going to fall. Now, looking technically at this, using our volatility-based technical analysis, if you look back to the left, you had some evidence building that trends largely negative to neutral, and you had previous levels that were put in on the SR34 lines, and these were tested successfully and price failed, the yields failed. Again, they reset slightly higher here in February 5th to be exactly. Again, you had price test it and fail, and so once you have this failure, you can drill down into your time frame that you would want to manage your trade. And so moving down to get more granular on the daily time frame, these same exact levels were overlapping as well, and you can see that they were tested, failed, tested one last time, and begin to move south. So one way that you can add to positions that you're already in is we have not just having the support resistance levels like you have here with the SR56, but you also have a high probability signals, such as in this case, since we're looking to short yields, we're looking at exit shorts, or I'm sorry, exit longs. We're looking at volatility shifts. We're looking at low slopes, and we're also looking at, like this here, the exit long. And so these provided several excellent opportunities to add to your position. These signals are meant to be non-lagging, by meaning we're not using something similar to moving average cross or something like that. We're looking at extreme measurements and volatility arithmetic, and this is what lends itself to high probability turn-in scenarios. When you couple it along with something like here, where you have this first signal is an exit long, on top of that, and obviously we're in a downtrend, but on top of that is against support and resistance. Now, another way you could do this, if you just didn't want to hold to a position and continue to pyramid it into it, one way you could do it is position trade. So your view for the intermediate time frame, next couple months, is I want to short these yields. And so if you initially shorted around mid-April, and you're leaning against daily resistance here, you can target things like support. You have different levels. You have the in-band here. Actually, in-bands met with the SR78, and because these levels again are predictive, they tend to have tendencies, and so even in a downtrend, you tend to have a pause or a bounce for 2 to 5 bars. Again, same thing. Along the way, you have different. Again, the SR78 was tagged, as well as the in-band 78 here. So there's different ways you can manage it, but this allows you to manage your risk, and you can also, in addition, do things similar to setting trailing stops. Now, this was support. It became resistance. Thank you for your interest in MetaSwing and for taking the time to watch this video on building positions. Here's our contact information. Please don't hesitate to reach out if you have any questions. Good luck and good trading.